You know, we think of diamonds as being permanent, right? A symbol of something that lasts forever. But what if I told you the industry that sells them is on seriously shaky ground? We're going to dig into a recent industry report that shows a market facing some intense pressure from basically every direction.
Okay, so a Supreme Court ruling, the shape of a diamond, and a snowstorm in New York. I know, it sounds like the setup for a really weird joke, doesn't it? But believe it or not, these things are all tangled up together. And they're all putting immense pressure on one of the most glamorous industries on the planet. Stick with me, and I promise we're going to connect all these dots.
All right, so where do we even begin with all this? Let's start at the top, with the big headlines that are sending absolute shockwaves through the entire diamond world.
And that first shockwave, it's coming from a place you'd probably never expect, the U.S. Supreme Court. A recent ruling just completely blew up the global tariff system. See, before, you had key players like Belgium who are exempt from tariffs. Not anymore. Now it's a flat 10% duty across the board. That special status? Gone. And then there's India, the hub where most of the world's diamonds are cut and polished. They were on a path to a 0% rate, and now, total uncertainty. Just one ruling has thrown the entire global diamond trade into absolute chaos.
But it's not just governments making things messy. Take a look at this number, $1.8 billion. That's how much Anglo-American, the parent company of De Beers, just wiped off its value. I mean, De Beers is the name in diamonds, and this is a huge write-down. It's basically a massive vote of no confidence from its own parent company. Ouch.
So why the huge downgrade? Well, it comes down to a classic financial squeeze. And here's the crazy part. De Beers' revenue actually went up in 2025, but their losses absolutely ballooned to almost $740 million. The report says it's because they got desperate. They had to resort to selling diamonds in bulk at rock-bottom prices just to get them out the door. So, yeah, they're moving more stones, but they're making way less money on them.
Of course, these big corporate problems don't just happen in a vacuum, right? They're tied directly to what you and I are actually buying. So let's step away from the corporate balance sheets for a minute and head over to the jewelry counter to see how the actual shape of demand is changing.
For as long as anyone can remember, the round brilliant cut has been the undisputed king, the classic. But that's not the case anymore. What we're seeing now is kind of a battle of the shapes. You've got the classic round on one side, but on the other, these long, fancy shapes are really coming on strong, especially for bigger diamonds, like 2 carats and up. The report even says that high-quality fancy shapes are getting tough to find.
And when we talk about long fancies, we're talking about a super specific vibe. Think ovals, marquises, emerald cuts, and those elongated radiants and cushions. It's all about that sleek, long silhouette. But here's the thing, the trend is really precise. The report makes a point of saying that the square princess cut, which used to be a really popular alternative, is now kind of seen as, well, weak.
And if you need any more proof of how specific this is, check this out. This quote is straight from the report. Just by changing a cushion cut from square to long, its price can jump by 20 to 25%, a 25% premium. That's a huge difference, and it's driven entirely by what's in fashion right now.
Okay, so we've got these massive economic pressures on one hand and these super specific changes in what people want on the other. So how is this all shaking out in the real world? Let's take a quick trip around the globe and visit the major diamond hubs.
First up, the United States. And honestly, the market here is looking pretty decent, especially for those bigger diamonds we were just talking about. Retailers are buying up inventory, which is always a good sign. And hey, remember that riddle from the start of this? Well, here's your first piece of the puzzle. A massive snowstorm is literally grinding business in New York's Diamond District to a halt.
Okay, let's hop across the pond to Antwerp, Belgium. The mood there seems to be getting better. Business is picking up, and surprise, surprise, it's the bigger diamonds that are selling well. And this is key. The report says the really good stuff is in short supply. That means demand is starting to be stronger than supply.
Now over to Israel, another major hub. Prices are holding steady for those high-quality, large, fancy shapes, especially ovals. But we're seeing something really interesting happen. As 7-carat diamonds get crazy expensive, smart buyers are now looking at 6-carat stones instead. It's a way to get a big look without the 7-carat price tag.
All right, let's talk India, the polishing powerhouse of the world. Things here are a lot more mixed. The report literally describes the market as being in a state of confusion, and that's all thanks to those U.S. tariffs we talked about. But on the complete other end of the scale, demand is through the roof for the teeny tiny Malay diamonds, you know, the little accent stones. And guess what? They're in short supply too. And our last stop is Hong Kong.
It's pretty quiet there as everyone gears up for the big trade shows, but there's still a steady demand for the absolute best of the best diamonds. But, and this is a big one, the report points out a huge, game-changing trend. Synthetic, lab-grown diamonds are grabbing a huge piece of the fashion jewelry market. This isn't some tiny niche thing anymore. It's a major player that the natural diamond world absolutely has to deal with.
All right, so we've heard all the stories from the trading floors around the world. But what do the numbers actually say? Let's look at the hard data, because this is where you can really see the financial impact of all this pressure.
This table here is the RapNet Diamond Index, or RAPI. Think of it as the Dow Jones for diamonds. And wow, the year-over-year numbers are just brutal. I mean, look at this. Half-carat stones are down over 26%. You can see that the price drops get smaller as the diamonds get bigger, with the huge 3-carat stones nearly holding their ground. This tells you exactly where the pressure from lab-grown diamonds is hitting hardest, right in those smaller, more affordable categories.
Now, if we zoom in on the classic 1-carat diamond, this chart tells the story of the last 3 months. And it's not some big, dramatic crash. It's something that might be even scarier for the industry. Just a slow, steady, relentless slide downwards. It's the perfect picture of that constant pressure just chipping away at prices day in and day out.
So let's recap. We've got global tariff wars, massive corporate write-downs, a huge shift in what people actually want to buy, and the hard numbers to prove prices are dropping. It all leads to one big question. The whole slogan for diamonds has always been that they're forever. But when you look at all these pressures coming from every possible direction, you have to wonder, is the future of the diamond industry really that brilliant? Or is it maybe a lot more brittle than anyone thought?